Hi, everyone. My name is Lisa Green Lewis. I'm a CPA and tax expert with TurboTax, and I'm excited to be here teaming up with the Create and Cultivate team for this event to answer all of your pressing tax questions and share some tax tips with you that you can implement to get a handle on your taxes and your finances and better prepare for next tax season. If you're considering the move from side hustle to full-time self-employed, which I know a lot of people do that, you'll want to stay tuned. I'm here with Brittany Castro. She's a certified financial planner with Mint and also the CEO and founder of Financially Wise. Together, we will walk through everything you need to know about filing your taxes and tax implications and finances to help you be informed on how to make that transition from, a side hustle to fully self-employed. So let's dig in.
Great. Thanks, Lisa. Happy to be here. And also for everybody joining us live, feel free to go over to the Create and Cultivate main page, and you'll find everything from today's event, including these slides that we're going to share with you. So feel free to chat your questions in the Q&A, because at the end, we will also be answering all of those.
So first, how to prepare. So you want to establish your business type. If you're going from side hustle to full-time self-employed, you want to decide, are you going to be self-employed? Are you going to have an LLC, be a sole proprietor LLC, or an S Corp? So you just want to establish that business entity and also know what the tax implications of that are. So if you're self-employed, you're going to file a Schedule C with your personal taxes. If you're an LLC sole proprietor, you also file self-employed taxes with the Schedule C. And then if you're an S Corp, usually you are paid wages. So you're paid from your S Corp, and then that goes into your personal taxes. You'll probably get a W-2. And then you also want to separate your business and personal expenses. You want to have a separate bank account. It just makes it easier for tracking. Although we have QuickBooks Self-Employed, that even if you didn't do that in the first year, it helps you easily separate your business and personal expenses. It's just much easier for tracking, especially at tax time. And I know Brittany will talk more about finances and why that's better. And then you want to set up your health insurance and retirement plan. One thing I want to bring up about retirement for if you're self-employed, there's much more generous tax relief or, for planning for retirement. So when you're a W-2 employee, you can contribute to your IRA. You can contribute up to $6,000, an additional $1,000 if you're 50 and over. If you're self-employed, you can set up a SEP IRA. And for 2020, you can contribute 25% of your net income or up to $57,000, whichever is less. So that's very generous, and you may be able to write some of that off on your taxes. And you can make that contribution up to the extended tax deadline and still make an impact on your 2020 taxes. And then Brittany, I know there's some advice around budgeting and goal setting that you want to provide.
Excellent. Yes, great information. And I think you're just so knowledgeable and make it super easy. So I think one of the biggest things when it comes to financial planning, from going to from a side hustle to a full-blown business, is to reverse engineer into it. So think about how much money do you need per year in order to sustain your personal lifestyle, be able to fund your goals, and then work that into your business goals from day one. Even if your business is not able to pay you that full salary from day one, you need to have clarity around what that number is for your personal income. And I think this is so important because that really gets you thinking like a business owner instead of just having a side hustle, a side gig where you're kind of making money and it's kind of a hobby. No, you have to think like a business person and say, I'm going to start this business because I want to make money and I want the business to be profitable. And the only way you can really do that is by knowing your numbers. So then once you kind of figure out what those numbers look like for you, then you want to figure out how soon can you start paying yourself this salary. Chances are it's not going to happen in the first 3 to 5 years of business. I mean, that's like the hard reality of becoming a full-blown business owner. So oftentimes you might need to prepare for 3 to 5 years of not having the income that you want from this business, because most of your money is going to go right back into the business to grow it and get it up and running. So with that being said, the financial planning is more about, okay, well, how am I going to support myself for those 3 to 5 years of business? So that's kind of where like these side hustles start, right? A lot of people do something on the side. They maintain their full-time job that pays them the salary they need to live their life. And then eventually, once they get their side hustle or business to an adequate number that they feel like they can make that transition fully, that's when they decide to take the leap and do it fully, because now they have enough revenue to pay them their income and obviously pay all the business bills as well. But some people aren't that way, right? Like for me, I just went like jumped right in. I was a risk taker. So I just went, all right, I'm going to open up a business and I got to figure it out. So, you need to know what your income sources are going to be. Is it going to be your cash cushion that you're taking from? Like that's what I did. I used a lot of my savings when I first started my business because all of my money was going right back into reinvesting in my business versus like being able to pay me the full salary I wanted. Are you going to get some sort of business loan, maybe help from other investors, whether they're like personal family and friends or like bigger investors, depending on what type of company you're starting. So it's really thinking through strategically from day one, what do those income numbers look like? What is the amount you need to start bringing in? Because I've just seen so many people over the course of 15 years of working with people on their financial planning that one, they can either have like a very successful business that's making a lot of money, but they still don't like reap the benefit. So they're not paying themselves the amount that they need, or two, they're just never making enough money from the business to really pay themselves. So either way, you want to be able to pay yourself an income to support your life, fund your other goals beyond just all the business goals. And I think that's a big part of financial planning, is really thinking through what does it look like for you and knowing that type of clarity up front so that you're like working the plan, because there's so much of business that is variable and unknown. So like you have to kind of go in with a clear game plan so that you can be able to pivot along the way more accurately. So that's more of like the financial planning, pay yourself first. Now let's probably talk through like taxes, because as we all know, once you're self-employed, you're responsible for making your own tax payments and want to know how to do that efficiently.
Yes, and really great advice. One thing you brought up, just about paying yourself, and sometimes people dive in. I was going to just kind of go back to where we talked about establishing what type of entity you are. And I have had previous tax clients, like they don't advise me and they start this side business and they don't, or not side business, they jump into a self-employed business, or it could even be a side business, and they immediately establish an LLC, which there's nothing wrong with an LLC, but I've had some people, they're not even making any money yet, and they establish that, and then they're shocked when they find out they have to pay franchise taxes. These clients that I had were lived in California, so the franchise tax is $800, and they're not even, they haven't even started making money, so they can't pay themselves. So I was just thinking about that as you were talking. And then also from our previous session, we received questions about, I just started my business, I'm not making money, can I deduct my expenses? And I advise, absolutely you can, because the IRS knows that people are starting their business, they're not going to be making money. But one thing to look out for, if it's years and years of not making money, they may, look at it as a hobby. So that's one thing I wanted to bring up. And then as we're talking about quarterly estimated tax payments, so when you're self-employed, if you expect to owe $1,000 or more, you have to make quarterly tax payments, quarterly estimated tax payments. And the deadlines are usually April, June, September, and then another one in January. So that's one thing to be aware of. So you want to maximize, if you're spending money on your business directly related to your business, you definitely want to take those deductions and those expenses, and especially when you're planning your estimated taxes. And I know we have QuickBooks Self-Employed that helps you track your income and expenses year round, as well as your mileage and car expenses. So you can figure out what those estimated taxes are. And also TurboTax Self-Employed, when you do your taxes at the end of finishing your taxes, it will give you your estimated taxes, for the next year. And then one tip I always give people, and they're not aware of this, they're really surprised. I don't know why a lot of people don't know about this, but you can annualize your estimated taxes. So that means instead of taking the full amount of net income that you make per year and dividing it by 4, the IRS gives you a little break. They realize that not everybody makes the same amount of money every quarter. Yeah. So if you make more money the end of the year, you can annualize and then avoid estimated tax penalty. And TurboTax Self-Employed also helps figure that out. And then self-employment taxes. So when you're self-employed, you have to pay your self-employment taxes. Usually when you have an employer, they pay half of your self-employment taxes. But now that you're self-employed, you have to pay your portion, and as well as what an employer would be paying. You have to pay self-employment taxes if your net income is $400 or more. But not to worry, you can deduct half of your self-employment taxes on your Schedule C when you do your taxes.
So many good tips. And I think this is like just such a good thing to educate people on from day one, because I remember even being a CFP and starting my company 8-9 years ago. I thought I knew taxes, and then I started a company and I was like, no, there's a lot more to know. So it's very helpful to have like the resources and kind of like the map out the timeline. And I always suggest, if you are a business owner, whether you're sole proprietor, S Corp, LLC, find the right resources like QuickBooks, TurboTax, good CPA, good bookkeeper, and then do a lot of also tax planning in not April, but like October for the next year. So I think that's a good thing too, because you have these quarterly estimated tax payments, but if you're doing a more formal tax planning strategy meeting in like October before the year ends, then you could also look, okay, what other things can I do before the year ends to maximize my tax deductions, right? Do I fund my retirement account? Should I buy some, things for my business that I could write off? Like, what is my tax liability looking like? Did I overpay or underpay my quarterly taxes? Am I going to, come next March, April, whenever I'm filing the next year? That way there's no surprises. And I think when you kind of build these good systems around money management, even if you're not fully able to do everything, like I know a lot of businesses who couldn't pay quarterly taxes, and maybe, we're okay taking the penalty for doing that, but then we're able to catch up at the annual basis. That's okay. Just know what your options are as a business owner, and then find systems to help you manage all of this, because it can be a lot.
Yeah. And one thing I was going to bring up, TurboTax Self-Employed, we're going to get more into our resources, but it uncovers industry specific deductions that there's so many different industries out there. And so it really helps you find deductions to maximize your deductions and lower your taxable income, which in turn lowers your self-employment income. And then also we have our TurboTax Live self-employed tax experts. And so they can guide you along the way while you're doing your taxes, or new this year, you can fully hand over your taxes to them. And they're available year round. So as we were talking about self-employment taxes, I know that's a big question for self-employed, as well as estimated taxes. So you're able to talk to them year round and ask them questions, can I take this deduction? Will it lower my taxable income? And how do I figure out my estimated taxes? So
Yeah,
wanted to bring that up.
it's so helpful. I mean, I think we all need professionals to help guide us. And I just wanted to also say that you said it earlier, but it is such a great idea from day one, even if it is a side hustle, to have a separate bank account. I mean, that is like one of the easiest things to do. And yet a lot of people kind of like delay on that. But that way, all of your business revenue, all of your business expenses are running through that business checking account, like bank account. And it makes it that much easier to track all your income and expenses for the business. And then come tax time, it's easier for you to say, all right, here are all the business expenses. And, then you don't have to be looking through your personal accounts and figuring out what was for business, what was not for business. And it's just a hot mess and everybody is like stressed out. So from
Yeah.
day one, that is super important. And I know also too, just to track your income and expenses on the personal side is just important. I think a good business owner is someone who can manage their personal life and business life. And it's a lot. I mean, I'm a CFP and I love numbers and I'm like, it's a lot sometimes, but use apps, even like Mint, to manage your personal life is so great. It's an easy app to look at your income, look at your expenses. There's a lot of features in there to look at your net worth, track like any expenses that you can eliminate, like subscriptions. I mean, there's just so many tools that we can use. And it's just a matter of like diving in, finding the right tool. And then I always suggest people have a weekly money date, or monthly, but weekly is nice, where you check in. It's a dedicated time where you check in with your money. For example, on my weekly money dates, I literally pull up my QuickBooks, I look at my Mint, I look at my budgets. If I need to like track invoices or pay bills that aren't automated, already, this is the time in my calendar where I do it. And I think as a business owner, having that weekly money date is extremely powerful because you stay involved with your numbers. Even like I'll look at my profit and loss statement. So I'm not surprised. I don't let a whole year go by and wonder where did all my money go or what happened, because I'm involved, and it makes it more digestible. Which I think is really important.
Yeah. And like you said, having a time to track your income and expenses, whether it's weekly or monthly, excuse me, whatever works for you. And we have QuickBooks Self-Employed that helps you track your income and expenses year round. Excuse me. And then it easily transfers to your TurboTax Self-Employed. Sorry.
That's okay. It easily transfers, I can tell, because these systems operate together and it makes it that much easier to
Excuse me.
transfer. You good?
Yeah. You can talk about the Mint apps. And
well, these are all tools, and I know we're going to dive into questions and make sure we answer them. So if you have any specific questions, you can leave them in the chat box or the Q&A. But here are just some tools for you to reference. And again, all of this will be on the Create and Cultivate page. You can watch this replay. You can download these slides, TurboTax, Mint app, QuickBooks Self-Employed. I mean, it's just, we got to use these amazing systems to help manage our financial life. And what I would recommend, because even I know a lot of people get overwhelmed, start with one, really just dive in. Like I said, those weekly money dates are a great opportunity. You just kind of put in the time every week, like make these systems, improve the systems. I mean, you don't need to do everything in day one, but have it on your radar and make sure you're making the steps to get the systems you need to manage your money. So I think what we'll do, let me stop sharing my screen so we could see all the amazing questions coming in. And Lisa, I don't know, I could just start like going through.
I can start. I'm better now. I don't know what happened. I've been talking a lot.
Yeah, you're losing your voice.
Sorry.
No.
Let's see. What is the difference between a SEP and a regular IRA? So a regular IRA, first of all, I know I talked about the contributions are much lower than a SEP. A SEP is available for self-employed, and regular IRAs, usually typically employees start those. So with a regular IRA, you can contribute up to $6,000. You get an additional $1,000 contribution if you're 50 and over. For a SEP, it's much more generous. You can contribute a lot more, 25% of your net income, or up to $57,000 for 2020, and still make an impact on your 2020 taxes. You can do that up until the estimated tax deadline. With a regular IRA, you have until the regular deadline, which is usually April 15th, to make that contribution. This year, we just heard the tax deadline was extended to May 17th. So just wanted to bring that up.
Yeah, that's kind of a nice grace period. I mean, last year was very intense. So the next question is, how much should we be making before starting an LLC? And I'm going to just add another one. What if you formed an LLC maybe too prematurely? Can you undo it? Which is a great question.
Yes. So how much should you be making? I would say that is a preference. Like I talked about previous tax clients that started an LLC before they even started, making any income. And then they find out that they have to pay the $800 franchise tax. So I would just make sure that you're, actually starting to make an income. I don't know. People sometimes jump into that because they think they're going to get more deductions or things like that as a self-employed person, having an LLC. And self-employed are able to get, any deductions that are directly related to their business. In addition, they can get the 20% qualified business income deduction that was passed under tax reform. So there's a lot of deductions there. I know people form LLCs because they don't want the liability. It's a limited liability corporation. It's not tied to your personal taxes. So that's one reason people start an LLC, but I would just make sure you're making enough money.
Yeah.
Before you do that.
I agree. I think you need to you need to be clear that you have to pay the $800 filing fee. You have to obviously file an additional tax return. So all of these things cost money, the setup of it. But also as a financial planner, I do think that it is wise to get that liability protection. So if you ever did get sued through your business, when it's an LLC, an S Corp or a C Corp, of course, they can't go after your personal assets. So even if you're not making a substantial amount, but you have the goal to keep this business long-term, it still might make sense to just set up from day one for that liability protection. But that is something to consider, as everybody is so unique.
Right. And tax wise, if you're a sole proprietor LLC, it's still very similar. You would still file your personal returns and file a Schedule C with your personal return.
There's another question, Lisa, that says, what is your number one tip for staying on top of your finances as a solopreneur?
Number one tip, I know we talked about it, definitely tracking your income and expenses on a regular basis. And, if you didn't do it in 2020, it's not too late. You can start for this year. It's always an opportunity to start and just learn. And whether it's, monthly, quarterly, at least, you're doing it so you don't leave anything out, like, some valuable receipts for expenses that could be worth a deduction.
Yeah, that's so good. I would agree. Any day, stay on top with your finances just by checking in once a week. Another question, Lisa, is I have 2 personal checking accounts with my bank. I set one personal and the other one is for my business as a sole proprietor. Do I actually need to open up a business account? So I think we just want to make sure it's the DBA connected to the other one.
Right. Yes. You would want to have your, like Brittany said, your DBA associated with the other one, but it's fine because you're already separating. So you would just want your business name associated with the other account.
Yeah. There's a lot of LLC questions. Should we link both business and personal bank accounts into Mint or create two separate accounts? That's a great question. I would say you need to have two separate because you need to run your numbers separately. That's like really the whole point of like doing a lot of this work in the beginning, even though it's tedious, is like keep your separate business checking account, personal checking account, and then attach whatever tracking systems, in this case, Mint, to each one of those and keep them separate. Because technically the way to think about it in just a very simple way is like, ultimately you want this business to be making enough money to pay you an income into your personal, and then you manage your personal income and personal expenses. So even with like the Mint budget, you want to look at them separately so that you get clarity on those numbers. I can just keep reading. We have a few more minutes. Oh, I don't know, Lisa, let's see if you, if I fail to file the estimated tax and pay self-employment tax last quarter, do I still have a chance to pay it before I file my tax return jointly with my husband?
So the estimated tax deadline, the last one for 2020 was January 15th. So you can't, it's too late to pay it. And then the question about your self-employment taxes, those are paid with your tax return when you file your self-employed tax return. So there's no worry there. And TurboTax helps you figure out your self-employment taxes. But as far as the estimated taxes, it's too late, but possibly maybe you could annualize your income like I was talking about. So you're not penalized for that quarter that you didn't pay if you earned your income like earlier in 2020.
Excellent. Well, I think that's all we have time for. This was so helpful for me, even as a CFP.
And me too. I always learn a lot from you too.
Yeah, I mean, learning from all these great questions. So really, thank you everybody for joining us today on this live workshop. We hope that it was helpful for you. You took away some nuggets of wisdom. Make sure you go back to the main page for the next session, Pivot to Profitability. It's financial planning strategies to strengthen your business foundation, because we all need that. And it's going to be another thoughtful discussion. Hopefully they can answer your questions, give you more wisdom. If for any reason you need to revisit today's session, you can also go back to the main page as well and download everything there, the slides, rewatch this session. It will be available until April 15th. But I believe that's all we have. So thank you for joining Lisa and I for our taxes.
Thank you, everybody.
Bye, everyone.